All right. Hey, everybody. This is Camille Westmoreland, and I am past due for a training on the Vibrata. And so, in this short video, many of you all who are part of FRX Academy on the Forex side of things may be looking into, different strategies that the company has to offer. Um, for the last couple of years, the Vibrata, which is formerly known as the Web Analyzer, has been one of my favorite tools where the Forex markets are actually concerned. And so, in this particular video, I'm going to be talking about the Vibrata. I've actually done a couple of updates to my strategy where ECC 11 is concerned. The concept is actually still the same. However, there are a couple of things I look for to help make the process simple. So those of you all who actually have this particular tool or are looking to add it on, once you get onto Vibrata, you don't have to make any changes in your settings. All your settings are preset for you, so you shouldn't have to make any changes there. So what I want to do, it looks like the market is kind of moving slow right now. No trades have come out in almost 3 hours. But what I want to do is take one of these older trades to kind of show you what you're looking for, because the reality is, the way the vibrato works is that you get an alert whenever the market has gotten to a point of support or resistance. And so you'll tend to see a little bit of consolidation before it breaks out in its particular direction. And so I want to go over with you and show you the process by which I look at a particular trade to make sure that it's a trade I want to execute. So in this particular example, for trading purposes, I'm going to use Euro AUD, which is the second one right here. And let me see if I can pause this to keep it from updating. It may or may not. Okay, so we're going to be looking at Euro AUD. So when you're looking at Euro AUD, you can see it was called 3 hours ago. So we're going to analyze this to see if the market has actually moved. So pretty much every couple of seconds, you're going to see that flashing because it's continually scanning the market to see if any new setups populate. So in this particular case with Euro AUD, the first thing you're going to do is you're going to draw your horizontal line. So your horizontal line is going to represent the actual called at price. So in this case, 1.56379. So you would literally come over here, select horizontal. I just say click anywhere on your chart, and then you'll hit your coordinates, and you're going to type that number in, 1.56379. Okay, so this is where price was called. Now you could change the color of this line to stand out however you need it to stand out. On the old platform, I used yellow because the background was white, but now I'm using black mostly because it's white. So now you do that. So after you've actually done that, you're going to now draw a horizontal line. And so the horizontal line, your vertical line, you want to put at where the price was called. So if you look over here, Euro AUD and UTC time, it was called at 1430. So you're going to scroll over until you get to 1430. If you look at the very bottom, you'll see that gray box, 1430. So where these two lines intersect is where the trade was called. Okay. So now that now that you have done that, now it's time for the next parts. So some people who do the analyzer, they immediately go ahead and execute the trade. This can work in some instances, but in some instances you may experience some pullback, because remember, when you're at a support or resistance zone, now it's at a particular point of determining whether the market wants to push through resistance, honor support, and so forth. So there could be some inconsistency there where you're caught in some consolidation until the actual move happens. So generally what I do is, once I mark this particular area, I look to the left at the candles to see where the previous high and the previous low are of the previous candle to help me determine my zone. So then I'm going to take a horizontal or a rectangle, And in this case, we're looking at this red candle here, and it looks like it's a very small area. Some people go out a lot further, but for me, I just honestly look back at the very previous candle to see the high and the low to make a determination of the zone that I want to see price break out of. Okay. So in this particular example, I have, and let me change the color so it stands out a little more. But in this particular example, I mark my high and low in this rectangle. Okay. So what I'm personally looking for is really 4 or 5 things that I'm looking for. So let me do some text and see if I can write these down for you all. Okay. So 1, break outside of the zone. Okay. And then that's the main thing, right? But, and let me correct my spelling, but it's a couple things you're looking for if you're looking for a buy. So in this case, they're calling for a buy on the trade, and you could tell because of the green line. If it was red, it would be a sell. The thing I want you to remember as well is that even though they're saying it's a potential buy, if your indicators line up for a sale, you can look for sale opportunities. So for the buy, the first thing I want to know are the candles above the cloud. Okay. That's one. Number 2, is the cloud above ahead green on top? Okay. The next thing I'm looking for is the green line above the cloud. Okay. And number 4 is the red line above the blue line. Okay. So these are the things that I am looking for when I'm looking for a buy. I only take trades when all 4 of these things line up for a buy. Now on the flip side, for a sell, okay, just got to do a couple adjustments. Are the candles below the cloud? Is the cloud ahead red on top? And I'm going to show you what I mean. Is the green line below the cloud? And is the red line below the blue line? So these are the questions that I ask and that I look at when it comes to actually trading. Okay. So these are the things that I'm looking for when looking at executing a trade. Okay. So let's keep it moving. So when you wait for it to break outside of a particular zone, it helps eliminate some of consolidation that you may experience. So for an example, in this particular instance, after I marked my horizontal, my vertical, I created my zone based off the last candle to know the previous high and low. At that point, I'm now looking, okay, so you can see the candles are above the cloud. So because the candles are above the cloud, this is telling me that I'm looking for a buy. Now, I will tell you, some people will go to the higher time frames, the 4, the 1, the hour, the day, but that's if you're looking to do long-term trading. A lot of these trades are scalp trades. So I'm really looking in the moment. I look down. So I'll look at the 5-minute and I look at the 1-minute to help also in determining when I want to execute a trade. But in reality, for me, if I'm on the 15-minute and I literally wait for everything on the 15-minute to line up, I tend to be in and out of profit really, really quick. Okay. So in this particular instance, so we're looking. Question number 1, are the candles above the cloud? Yes, we're good. Is the cloud above green on top? You see the green line on top. It is. Great, let's go. Is the green line above the cloud? This green line right here. Yes, it's above the cloud. Is the red line above the blue line? Yes, the red line is above the blue line. This is a great indicator to buy. So everything lines up in this instance. What I'm looking for is a breakout above the cloud. So in this particular trade, I literally got in right here on this next candle. So I got in on this next candle here. I'm going to make it green to show this is where I got into this position. Okay. And so when I got in on that particular position, you can see that there was some pullback back into this zone, right? Because we're near an area of support and resistance. But then it continued to push up back into a profit spot, right? And so looking at this from this line to where the market is now, that's roughly 28 pips that the market had moved. And so if you're doing 10 pips and dip, you would have already been out of this trading position, okay? And so if you take this and leverage it with your particular compounding chart, you'll be able to position yourself to start growing your money compounding every single day. For the person that may have the question of, Camille, what should I put my stop loss at and so forth, you can leverage the Ichimoku cloud different ways to help you determine your stop loss. So a couple of things that I look at, I'm very big on support and resistance. So even where this price was called at, it was called here, but I didn't enter till up here, right? So where the price was called at could be a point of a stop loss for you. You see what I'm saying? Also, if you want to go a little lower, you can go below the zone of that low of that previous candle, and then you're able to put a stop loss here. So that can work as well. So it's really up to you which way you want to go about it. Solely leveraging support and resistance. I don't know why I changed that color to that. But solely leveraging support and resistance. After you mark your zones, knowing if it goes below that zone, more than likely I'm going to be looking at a sell. So those are the ways you could put your parameters in place. As far as your take profit, 10 pips and dip, or you can look for the previous high. And you look on a bigger scale where this is concerned. So for example, you get in the trade here, but when I look back, as I could see, here was a high, but this was a serious high here. Let me see if I can draw that line here. So this was a high. And basically when I look for a high, I'm looking for pretty much like where did it hit, and then an engulfing candle came and changed the direction. So as you can see here, this was a previous high, and when you look back over here, you can see that this is where the market is, and as you can see, it's trying to decide what it wants to do. So this could be a great point of exit because a couple of things can happen. It can pull back down to this zone again, or it could potentially break. But to not risk, as you can see, it's pulling down right now. But to not risk your profit, you could go ahead and take your profit and then just wait on another position. So those are literally the steps and what I use and implement for the ECC 11 strategy on the Vibrata. So I hope this helps. If it helped, put comments in the chat. If you're watching and you're like, Camille, I'm not plugged in and I'm interested in learning about this tool, get with the person who shared this video with you. Or if you came across my page and want to connect with me, I would love to have you. And I thank you all for tuning in, and I will catch you on the next video.